The market's a stark contrast to what we saw in terms of yesterday's performance, deeply in the red, and now we are almost 2% in the green. One of the big indices to thank here is your resource stocks, who are over 3% in the green this afternoon, and that's, of course, thanks to the recovery in the commodities prices. Let's take a closer look at how your markets ended off the week. Let's break down those market movements now with Martin Smith from Anchor Capital. Martin, as always, I thank you for your time this evening. Let's start off with that overall performance. I mentioned in my intro that yesterday we were deep in the red, and there's a major change today, almost 2% to end off the trading week. Talk us through some of those catalysts.
Absolutely. We had a very, very strong bounce after yesterday's movement, and a lot of it was just a bit of a rebound and some strength, specifically in the things that were so deep in the red yesterday. Resources, even Naspers up a little bit. And I think I've spoken about this quite a lot, so apologies for sounding a little bit like a broken record. But over the last 6 months, I've said this volatility swing is going to be there for probably the rest of the year. I mean, there's a lot of positive catalysts, but then you have things like Delta variant, or Chinese regulations, or COVID vaccine rollout, and when the Fed have minutes that come out like we saw on Wednesday night, there's just this continuous swing between risk on and risk off and risk on and risk off. So I think we've seen the perfect example of that over the last 2 days, with yesterday being risk off and today kind of being risk on again. And I think the name of the game at the moment is to keep being invested. I think there's a lot of tailwinds. I think markets will grind higher, as they have done this year. And I think you just need to kind of stomach the volatility and make sure you're picking good growth companies and not trying to chase a trend, whether it be value or growth on any given day.
Right. What about the Rand, Martin? I saw it make some positive moves over the last couple of days, although I'm not sure how much that has to do with former President Jacob Zuma finally being taken into custody. Your thoughts on the positive movements that we're seeing in the local currency?
So a lot of the time what happens in the local currency, most of it essentially, is actually what's happening with emerging markets. I think as South Africans, we get caught up in saying, oh no, something's very specific in South Africa happens, the Rand's going to blow out in one direction or the other. But most of the time, 80% of the move is probably around emerging markets and emerging market sentiment and global kind of risk appetite. So it's also very difficult to see what's the impact of that is, because again, there's been a lot of moving parts, specifically with China and the regulations that are being imposed there in terms of the tech companies, as well as a big kind of risk swing with Delta variants and the like. So the impact of what's happened with regards to Zuma in terms of the Rand, very hard to kind of gauge, because there's a lot of noise in the market at the moment. But the Rand has held up quite well, and a lot better than I thought it would have at the beginning of the week.
Right. Let's get into some company news now. Imperial announcing a day or two ago that they're going to perhaps be delisting should the sale to DP World come through. They've released another statement today giving us an update of that formal offer. Your thoughts on the sale and the fact that one of the biggest logistics company in South Africa, and perhaps even on the continent, will be delisting from the JSE potentially?
Yeah, it's a little sad in some ways. It's another blue chip company that's going to be off the JSE. We've seen a lot of delistings, whether it being through buyouts, whether it being through companies going private themselves. So that is a little bit sad, but I think overall for shareholders, I think they'll be happy. I think it's a good deal. It's 40% premium on what the share price was pre the announcement. So I think shareholders will be smiling. I think it's a good deal for them. And I think it's also just a function of how cheap SA assets are. I think if you look across the board, there's lots of South African assets that are screening as good value. And I think maybe not for takeout targets, but I think when foreigners realize how cheap our assets are on a multiple perspective, I think we could see some flows. So one to be kind of wait and see on a kind of front, but I think a good deal for shareholders, and yeah, interesting to see how it happens.
Yeah, unfortunately, Martin, we've unfortunately run out of time. I would have loved to get into this debacle between Nigeria and MultiChoice, but that's obviously a conversation that we'll continue to watch very closely and have over the coming days. That's Martin Smith, who is a portfolio manager at Anchor Capital, joining me this evening to wrap up the Markets Day.